Greetings and welcome back to The Pride. My name is Muphasa El Matador. They call me the Curious Cat. My job is pretty simple. I help grow your conviction. Conviction to buy, conviction to sell, conviction to hold. And today we're looking at the current stock market rally. It's bulls versus bears, so join me as we jump into the charts. To the channel, smash that like and subscribe button because out here in The Pride, we definitely do the simple things consistently. If you check out the last video, we pointed out that a breakout of the dollar usually coincides with a downtrend in the market. And this time was no different. The first week of February, we pointed this out and the dollar just completely went on a bullish run all the way to 105. The stock market actually went in the opposite direction. And this continues to happen during this bear market. So we take a close look at that every single time. But now things have changed. We've gone from this bullish trend in the dollar to a little pullback to the Fibonacci retracement. And I see that as a pivotal sign for us to be looking at or into what's coming next. So I have my Fibonacci levels in these gold dotted lines. And these horizontal bars show the Fibonacci times. A lot of people don't use that, but I use that for personal evaluation. And what I'm going to do now is I'm going to do the trend-based fib with you guys live so you can see the madness behind what we look for in the market. So I have a confirmed Fibonacci level right here because it did pull back to the 23% fib. And so what I'm going to do is hit my B and my C. I'm going to extend it all the way out to June so that I can essentially evaluate personally what to expect going into the market. So now that I have my levels drawn, all I'm going to do is trace where these fib lines, and all you have to do on TradingView is hit Alt H and you can draw out the line really simple. I use the dotted lines, so I have my 38% Fibonacci as well. I have my 51. A lot of people love the 51, the 50, the 61, and my 78. And that's it. With that, I am pretty set for the dollar going into middle of the year. And with that, it looks a little clunky, but I know what I'm seeing as the dollar trades. Like if the dollar is going to fall, you expect it to hit these levels on the Fibonacci. It hits 103.9. If it breaks below that, I'm looking at it for 103.3. If we're going up, I'm looking for it to 105, 103. And this helps me to visualize what's coming in the market. With that said, I do want to point out that we are currently still in a bull trend. I said this in most of my videos. Most people can't understand it. This is the monthly chart on the SPY. And as you can see, all we've done is pull back from 2022 into 2023. All we've done is have this extended pullback or topping process. And we are currently trying to fight a big war between the bears and the bulls. I look at my daily chart to give perspective on where we're at currently. And I looked at my 200-day moving average, and we could see that this held as critical support as not only the SPY, but the QQQs, a lot of things were literally sitting at this level. It had to hold. Historically, we've never stayed above the 200 moving average for this long and still broke below it. So breaking below the 200 and trading below the 200 would have killed the bulls' momentum. We expected them to come into the market when we got the 9 count buy signal. They came in and we're currently trying to break above the 20 moving average, this purple line right here. And what's really important about this is once the purple line turns and starts to slope downwards, it serves as resistance. If we're able to break above, then we're looking at the Fibonacci levels going upwards to see where we're going to trade to. I don't expect this rally to extend into this high and break the high. I'm looking at a rejection at the next fib level or the one above it, which I'm going to show you guys in a second. And then I expect us to turn and go all the way down. And all of this bearish sentiment that I have is because first, the fear and greed index is actually showing that we are in a decent level. However, there is a lot of catalysts coming up in the future, which you definitely have to look out for. If you're trading in these markets, you definitely have to check the weather before you go surfing. We're still in neutral, but we're ticking down into greed. So if the next two sessions push us higher, we'll be in the greed level. We were at extreme greed when I made my last video. So this is a little safe zone to be at, but it's important to look at the economic calendar before we go into the week so you can see all the things that could really turn us on a dime. First, anytime Powell speaks, a lot of mad things happen in the market. It's like no one man should have all that power. 10 a.m. Tuesday, 10 a.m. Wednesday. He's testifying in front of the House and the Senate. They ask questions. He says things like disinflation, market goes up. He says things like pivot, market goes up. A lot of madness could happen because it's not just what he says, it's how the market interprets it. He could say a lot of bearish things and say one bullish word, and that's the kind of market we're in right now. We have the jolts coming out as well on Wednesday. Jobless claims on Thursday. Waller speaking Thursday as well. And Friday is also a big day. So I'll be looking at Tuesday, Wednesday, and Friday as big days to trade in the market. It could be a big nothing burger. However, it's important to know what's coming. Monday is going to be pretty decent. So my expectation going into Monday is we pump, break above the 21, probably hit those Fibonacci levels that I'm going to show you guys, and see if we can break through or hold over there. We hold over there, power comes through, blesses us with a little bit of bearish or hawkish tones, and we start to fall. If he's bullish, we continue to ride. So that is the expectation going into the week. With that said, I'm going to show you guys my fib levels on the SPY so that you can see the levels that we are looking at for where to go to. And then I'll show you guys, not only did we call the top in the market in my last video, showing you guys that we were getting to the end of that rally that was supposed to be a melt up, I'll also show you that we were able to spot when things were turning around from the decline. So here we are, right? We started our fall, like I said, in February. About February 3rd, 2nd to 3rd, we started our exhaustion to the top. And as the dollar was going up, the market continued to sell off. We hit the 200 moving average, chilled over there, and the buyers came in. We're breaking over my 20 EMA right here, so the 21 EMA, and we have our fib levels, 406 at the top. Next level is 413. Don't expect us to break above this. This served as a strong resistance during the last pop. I'm expecting us to hit 406 at open, probably already there when you look at the futures. But I'm expecting us to hit 406 at open. If the market wants to go wild, then we'll trade all the way to 413, chill over there, and wait for Powell to give us direction. I don't expect us to break over the 418 high. However, we have our fib levels for extreme situations. At this point, I'm trading it day to day all the way to March 14th because there is no telling where we're going. The entire sentiment is still for us to come back and take out the October low. However, I don't know how high this rally is going to go, and I'm just pointing that out. And you're seeing the levels to watch out for on the upside. And when we start to turn, we will be looking at taking out the October lows, and there is a possibility for us to drop 20% in the market. But for now, everything is turning and looking bullish. So you ride the momentum all the way up. However, once you hit these levels, you should be cautious. Now, I'm going to show you guys what we were able to do going into last week, the way we ended the week. So we've been holding on pretty strong, playing the bearish momentum down and keeping our portfolios up by hedging. However, once we noticed that we were getting to an exhaustion on the downside, we were able to take advantage of that as well. I called out on Thursday that the Nasdaq was set to complete the 9-count buy signal, and our trade plan was to take profit on our puts, watch for confirmation of the bounce, buy calls on the TQQ. We had the 9-count buy signal on Thursday, and that 9-count signal was confirmed. Thursday, we were able to break the 200 slightly and then bounce from there, and we had follow through on Friday. So we're going to look for an extension of that into Monday, and I believe we're going to stall at the fib levels that I just showed you. And we were able to take advantage of this trend. And I also jumped into GNS. I'm looking for an extension on that trade to the $4, $5 level on Monday. And if you want to see when we get into these plays and how we literally trade the market and get these 200, sometimes even 300% moves in the market, all you have to do is join the Pride. We hit 350% on TQQQ, which is pretty insane if you ask me. And we have our targets for the Nasdaq, the SPY, and we will be trading everything in the market according to how the movement goes into next week. I believe that is all that I have to share because I'm not going to go into any individual stocks today. I wanted to make it short and sweet and give you guys expectations for next week. And with that said, it's Muphasa El Matador.